Recording. Okay, yeah, so you can see it recorded, right? It's being recorded. All right. So yeah, today we're going to look at the financial services sector, the Ghanaian context. We want to look at the makeup of the sector. I mean, when we talk about the financial services sector, which areas are we referring to? Continue. Is that recording from your end?
Yes, yes.
Yeah, there's nothing like continue. It means it might be on your.
Yeah, Doc. Yeah, there's a recording from our end.
Okay.
All right. You can see recording at the far left.
Okay. Okay. Great. Okay. All right. So the session overview. It is imperative that we understand how marketing environment influences current and future demands of financial products. So we would actually look at the broader environment, of the financial services, and then of course what it is, the makeup of the service and what underpins the growth of the sectors as we know them. The reading list or the recommended text as you have them, if you cannot find the textbook itself from the bookshop, which I suspect you may not, because the financial services is very specialist area, so you don't necessarily find textbooks as I have recommended here, but you may find other textbooks that you could actually use as an alternative. Apart from that, you can find ebooks. If you search, the university has quite a large database of ebooks, so I'm sure you can find them there. Okay, so when we talk about financial services, we're looking at fields such as the banking sector, we're looking at the insurance sector, we're looking at the investment sector. So we're looking at all these services that actually rely on what we call some kind of intermediation. All right, so most of the financial services are actually an intermediate between the depositor and then the lender, the one who's actually putting in the money at the bank, and the one who's actually borrowing the money from the bank, or if it's an insurance firm, the one that is actually taking up the insurance. Know that insurance companies, most of the time, whatever it's like a pool, whatever they actually pool the the customers, resources, they further invest that money in order that they will be able to satisfy, the demands that you make if you have to actually have a claim for it. So all these sectors, the sector that actually play intermediation role in terms of finances is what we actually discuss. In the same way with investment firms, they actually collect and then they deposit it in other areas in order that they will be able to satisfy your demands, should you, require that. So you would see that the list of financial services that we're talking about, the types of them, retail, corporate, investment, and private banks, mutual funds, personal and group pensions, life and general insurance, reinsurance companies, credit card issuers. All these ones are the kind of firms that we're talking about when we talk about financial services. So in terms of Ghana, for example, you have certain what they call specific insurance, financial services that may not be here, but the key ones that we know are these, the major, what we call the universal banks. Obviously, you have the insurance, you have rural and community banks, microfinance, capital market, others. Now, the sizes actually depict, the level of intensity or the size of the market that we have. We know that the universal banks are the major ones, in this country. Obviously, the insurance, rural community, and then rural and community banks, the microfinance, obviously the savings and loans, but then we put a microfinance as the most popular. And then of course the capital market, and then the others, as the sector actually looks like. Now, obviously, this data probably because of the cleanup, wouldn't be reflective of it. But it used to be that you had about financial houses, credit reference bureau, savings and loans, leasing companies with these figures. But of course, because of the financial cleanup, probably have to update the list of, the types, the major, insurance, what do you call the major financial institutions that we have in the country. Now, the underpinnings of the banking growth, for example, and we're saying banking because that's the most, predominant when we talk about financial services in the country. The underpinning of the growth, and not only the banking, but also insurance, for example, are significantly, these, developments. One of them being, the oil find, for example, the idea that, when the country actually found oil, you had quite a number of, you know, companies, coming into the country, especially those who actually work in allied, what do you call areas. So you have the banking sector itself, you have the capital market, you have, the insurance, and all these things have actually contributed to the growth of the financial services. Now, other key, factors that have actually contributed to the growth, most of the time we talk about the democratic or the liberalization of the Ghanaian market. In the past, the Ghanaian market was very closed because obviously of the regime, the kind of, government we used to have. Now, since 1992, when the country had actually transitioned into democracy, and then of course, the aftermath of the deregulatory and then the, what do you call the liberalization policies, it meant that the economy got expanded because those dysfunctional state institutions were handed over to private, hands, and so it injected some efficiency into the market. It brought in, competition, etc., and so that actually, expanded the Ghanaian economy, and as a result, expanded the financial sector, which is of course the engine of growth because majority of the, business transactions actually pass through what you call the financial sector. Now, other things like, the small business entrepreneurship would have actually contributed to the growth. And so you look at the expansion of SMEs, activities would surely, need capital. And so that would actually, kind of add up to the growth of the sector. Now, any other thing that you may think had actually contributed to the growth of the financial sector? Any ideas? Apart from these ones that we've talked about, what are some of the things that you think probably might have actually contributed to the growth of the financial sector? Yeah? Any ideas from you? Contributions? Yeah, Prince. Prince,
Yes, Doc. Increased penetration.
Increased penetration of what?
Like say the banking sector, having more rural folks joining slowly. I know it's slow, but slowly you're getting people, especially in the insurance industry, penetration moving upwards a bit because people are now understanding the insurance sector and they are now getting to it slowly.
Okay. So literally we can talk about urbanization. I suppose that's how we can actually put across, where urbanization means that, when people move from rural settings or when there is an enhancement of the livelihood and economic activities in otherwise rural settings, that actually expands the market as well. So yes, that's true. You can actually consider that. But I think there's also externalities. For example, the actions taken by the Nigerian government in terms of their own cleanup. I'm sure some of you would have been working in the sector at the time, just like we did in terms of the financial cleanup in Ghana. when Nigeria, asked its financial sector to actually recapitalize, quite a number of them couldn't actually meet not quite a number, but some couldn't actually meet their recapitalization requirement. And as a result, they had to exit the Nigerian market. And that's how come we saw that wave of Nigerian, financial institutions coming to Ghana. And that also contributed to the expansion of the market. Because of that cleanup, just like we just embarked on about two years ago, or 3 years ago, Nigeria embarked on similar stuff. And as a result, there were some companies that had to exit. And Ghana became the safe haven for them to invest. So that also contributed to the expansion of the market. All right. Any other view? So per the PwC, banking survey report that they put across, they actually came up with the understanding that there was a missing middle because there was a lot more activities underneath, which is the advent of the micro enterprises at the time. Almost 65 to 75% of activities or financial activities, centered on the micro, enterprise or micro enterprises. And the other half was at the top, which is the 0.9% and then 0.1% at the top, which meant that there were large enterprises that were having financial support or financial assistance. Obviously, as a result of banking, oil, for example, and as a result of what do you call the minerals like mining activities, and all these activities needed big ticket financing, and so the top and then the bottom were heavily, resourced in terms of financial assistance. According to that report, the middle, i.e., the medium enterprises, were suffering because most of the activities were, at the bottom of the pyramid, and then or the broad, base, and then the top base, whereas the middle was actually missing. Now, who can actually attribute, or who can actually tell the reasons why there were a lot of concentration at the base of the financial sector and at the top of the financial sector, but then the middle enterprises, i.e., the medium and the medium enterprises, were actually suffering in terms of financial assistance or financial support? Who can actually attribute the reasons to it? Who can say? Don't forget, we're discussing the financial sector, how the makeup of it, and the trends over time. Before we look at the extensively what are some of the methodologies in dealing with that. So we're saying that the market expanded because of some other reasons that we have ascribed. But then there was a report from PwC that says that yes, at the base, broad base, there was a micro enterprises activities between 65 to 75 that were actually sprawling. It was booming. Of course, those businesses that are actually at the top also had a lot of financial support, but not those in the middle. They were struggling, which they call the missing middle. Who probably can actually attribute a reason to it? Who can? Yeah? Guys, let it be engaging because it's difficult to teach online. Yeah, Kelly. Yeah, Kelly, let's hear you.
Can you hear me? Hello?
Yeah, hear you, yeah.
Yes. So I stand to be corrected though, but I'm going for the micro enterprises. I want to explain why they had such huge percentages. When I see micro enterprises, what comes into mind is probably the concentration on the layman who doesn't really understand what banking entails. So I'll say that the micro enterprises really concentrated on probably those are local businessmen and women, like they got down to their level. And if you look at the breakdown of Ghana, our population, those are the rural areas. And those that are not so much literate, make have a huge, percentage. So I think the micro enterprises targeted those people. And that's why they had a major percentage, because also those people had the fear of the upper pyramid and the middle class, the middle pyramid as well. So they felt that the micro enterprises was to their level, and in case anything happened, they have a safer haven. Yes. So that's, I stand to be corrected though.
No, of course. I mean, it's a class. You don't have to. Yeah,
Okay.
great point. I think it was a great input from that. Yeah, Frank. Yeah, you're on mute, so if you can, yeah.
Okay, thank you. I believe, looking at the report, I think it's in relation to around 2013. And around that period, if my memory serves me right, a lot of the banking institutions were targeting the individual sole proprietorship. If you realize, that was when the UT banks, the GN banks came in, and the targets and focus was solely on the individual sole proprietors.
Yeah.
And a lot of their attention had gone there, and they were pushing a lot of money in there.
Yeah.
So I believe that's contributed to the chunk of the finances going down there. Thank you.
Yeah, absolutely. I mean, just like Kelly also said, that's the point. I mean, they especially when you take emerging markets, there's a lot of attention, policy, driven, what do you call economies, that the economies tend to focus on pro-poor agendas. All right. So most governments want to uplift people from poverty. And so majority of emerging markets are actually policy-driven economies as opposed to market-driven economies. So because of that, there is a concentration, or there is a focus on the base of the pyramid to uplift people from poverty. And most governments of emerging markets are actually over-concentrated on that agenda. And then, of course, the upper tier is about those big corporations going for finances, for exploration, for oil drilling, for all these kind of activities. So when it happens like that, it means that the middle enterprises are suffering because government focuses on the base, and then of course the big banks and the big finances focus is on the top of the pyramid, and so the middle people tend to be fleeced out, of capital or access to capital. So exactly the points that you guys are making, and so if you look at 2013 onwards, even up until date, I mean, I don't even know which regime of Ghanaian government had ever said that they actually focusing on middle class. It's always about the broad base because of poverty. All right. And so the question then is, how do you then make sure that as a financial sector, as a financial industries, you do not focus so much at the base and so much at the top, and then fleece out those in the middle, potentially who can actually turn the economy around, right? Because there are quite a large number of middle enterprises. And I've been in discussions at AGI, Association of Ghana Industry, where their members, that is the middle level, middle enterprises, actually complain of lack of services. I mean, financial access, lack of financial services to them. So in our teachings, we have to actually draw attention of the players in the field and say, look, yes, pro-poor policies would actually mean that we have to pay attention to the bottom of the pyramid. But it's also crucial that we do not over-concentrate, at these levels, because there are other ones who can actually turn the economy around quickly or much quicker. And so in your decision-making, in your consideration, you want to make sure that your product and services do not overly concentrate at the base or at the top tier, but there must be an attention, given to the middle level as well. So definitely the clarifications were right. Any other contribution or any other question before we move on? Any other contribution or any other question? Okay, so obviously the report in detail, it's on there. I'm sure that if you want to read it, you could actually have. So as we said, some of these banks, of course, we know that they are no longer because of the cleanup. And so the country had actually reduced the size of the universal banks to a minimum. So that's a little bit of overview. Yeah, Janet, you're on mute. If you can unmute yourself.
Yes, just a question.
Yeah.
When the financial institution and the government concentrate on these various levels, the government especially, does it really correct or bring up the one who is classified to be poor to climb up to being upper class or middle class at the end of the day?
Okay.
Because I am thinking when the government concentrate there over and over again, it rather risk the entire country's economy, because most the higher percentage of our economy is relying on the informal sector.
Yeah.
So then when they keep concentrating on the bottom base as a government, because they have an agenda or a policy they want to execute,
Right.
they end up risking our money as a country, really. That's how I've been seeing it.
Yeah.
So is that the right way for the government to go? After the financial institutions targeting the one who has all the money, well, they need those as the clientele base to be able to hold the banks, to hold the money in there, so they don't go bankrupt or something.
Yeah.
But then for government to come in on the other side and keep pushing that and risking everybody's money. Really?
That's a very interesting question, but that's very much ideological. I want those who have ideological views to answer that question Janet is asking, because such a question would bring into sharp focus the issue about free SHS, free NHI, that kind of questions. All right, they're very ideological. So the floor is open. Let's hear you. Yeah, who want to say? Frank, come on. Yeah.
Okay. Not to sound political, but you see, a lot of these policies that in our part of the world, a lot of the policies that come has some political linings.
Yeah.
So if, for example, I am a socialist, my focus will be on the social, but however, we note that a lot of them are now focusing on the numbers. So even though you realize that they are risking our money, their focus first and foremost is the numbers. Then later they look at how many of these people are we going to lift up. So although their policies are brilliant ideas, the technocrats are left out. So it becomes a political idea. Instead of allowing the technocrats to direct the idea and say, okay, you came out with this policy, just like you were saying. Let's take, for example, the one district, one factory.
Yeah.
That's how the financial guys do the risk assessment and everything. But in our part of the world, it won't happen that way, because a lot of them will come in and only support companies that have their back, let me say, for lack of a better word. So just like you were saying, it depends on their political lineage. But also, we the voters sometimes we focus so much on this party, that party, instead of looking at what this person has done. Is it supporting this idea, or whatever the party is doing? Is it supporting the individual businesses, as she was saying?
Yeah.
You are risking our money, but is it going to the right channel? If it's not going to the right channel, do we have the muscles to say, let's change them and bring in somebody who will implement the right thing? Thank you.
Great point, great contribution. Yes, so the question that Janet is asking, as Frank was explaining, if you look at so many other policies, government policies like what do you call this so-called, is it it's almost like a free money, NHI, what was it?
MBSSI.
No, MBSSI, for example, all right, MBSSI. Now, before that, I think Kufuor set up one of the poverty alleviation schemes. What was it? The LEAP, right? The LEAP, and after the LEAP, it was changed to, the LEAP was changed to another one, all right? Then there quite a number of, poverty alleviation schemes that were supposed to have lifted some people from poverty, i.e., granting them what do you call credit-free, interest-free loans, right? Interest-free credit, so that they could use it to work and then get some capital, obviously at some point pay back, and then be self-sustaining. And Janet is actually asking, are these really working? Have we been seeing people being lifted from poverty, for example? And if they have been lifted from poverty, are we seeing really the numbers? And Frank is actually saying that sometimes it's about numbers that they're looking at in terms of vote. I suppose, Frank, that's what you meant, right? In terms of vote, whether
Exactly.
whether it would yield them the required vote to win elections. And so they're not even particularly bothered about whether they are actually been lifted off poverty or not, but so that they will be in the good books of the voter. Now, my take is, obviously elsewhere you would see ideological differences. And I remember one time I was speaking to Jacob Echebilamte of blessed memory, and he said they are for wealth creation as opposed to poverty alleviation. Yeah. And these are two different ideological positions. All right. Wealth creation means that there's a much focus on you turn out, what do you call profit, and let's make sure that your business is self-sustaining, etc. On the other hand, poverty alleviation, to them, it means that, well, yes, we want to lift you out of poverty, but it's very much government policy driven, or it's very much government driven. Get you some money, and then of course, let's see whether you're out of poverty. And it is not so much about profitability, but it's about sustainability, for example. Of course, these things you can say are words, but indeed, Janet's question was, do people really get lifted of poverty? The answer is, we've seen it happen in other countries, all right? Especially the Bangladeshi places, those places that actually had a microfinance, ideology coming in, like India, etc. There are evidences, and even in China, there are evidences that people have been lifted of poverty. Unfortunately, in our case, it's almost like the prophets and then those reverend ministers who claim that they've actually, healed people. We don't see them. We don't normally see those people who have been healed, just like those who have been lifted of poverty. We don't see them. But what we see is that every government cycle, we see our money being shared, across so-called the poor, but we don't see them coming off poverty. I think that's what, Janet, you're saying. That's the point that you're making, that we're risking our money.
Yes, yes.
So perhaps the assessment or the impact assessment does not go down well. And if it does, we don't see the reports. Because if we've had LEAP since Kufuor's time.
Kufuor's time, yeah.
Now, can we really report to the country how many people since then have we seen being uplifted from
their lives better? Yeah.
We don't see them. As I complain about the reverend ministers, we don't see those who they have healed. You always see on TV, somebody has been healed. He's no longer in a wheelchair, but none of us know any of them. Right. Any other views, please? Otherwise, we'll move on to the challenges of the marketing financial services. Any other views? Any other views? Okay. Okay, so now let's look at the challenges in marketing financial services so that we'll be able to tell how do we, do it. Okay, so subtopics, we're looking at the changing financial services industry, the changing consumer, the economic forces, etc. Okay, so this is how the industry setup looks like. We're saying that in most financial services or in most regimes, you find a changing marketplace, and the changing marketplace is that we see an industry consolidation. In fact, in most recent time, that's what we have experienced within our sector. The financial services sector has seen a consolidation as a result of, policy-driven, what do you call, mergers and acquisitions, for example. Obviously, when you hear mergers and acquisitions, most of the time it's business-driven. business policy, i.e., there's a firm that is thinking about, or there's a board that's thinking about efficiencies, all right? And so they feel that the company is not doing so well, they want to put it up for sale, or a competitor thinks that we can go and grab this firm because it will help us generate more equity. And so they'll put in a bid, and if the players in the industry or the players in that particular business accept, they buy that. Now, recently, we have seen more of a consolidation as a result of government policy, because government thinks that there was too much rot in the system, in the financial sector. Now, that's ideological. Some people do not believe that, yes, that was the way to go. Some people believe that was the way to go. So government says that, yes, just like Nigeria did, we are moving towards recapitalization so that we can safeguard depositors' funds, and we can safeguard investors' equity. And so if you are not able to up your game in terms of adding more to your capital, then of course you have to exit, or you've got to find a partner in order that you could actually be on a solid ground. So the government pushed in what they call the financial cleanup policy between 2017 2018. And as a result, we saw some companies leaving the scene. All right, we saw some of them merging, we saw some acquisitions. All right, so you would say that from 2017 onward, we have actually had industrial consolidation. All right, now there is another which to your right is fragmentation of the let's see, consumer base. All right, so the idea is financial sector has experienced some fragmentation, and the fragmentation is as a result of the new type of capital or the new type of financial service that actually came into being. In the past, we only had what we call the banking, the specialist banking sectors, or we had what we call commercial banks, all right, and then of course we have what we call the industrial banks, or the NIB type, the investment banks. We have the agric bank, and then we have bank for construction. So there were specialist banks, and there was also a commercial bank. Now, there was a policy change to move into what we call the universal banking license, where you don't have to be a special bank. So you could actually secure a universal license and deal in any other sector that you want, whether agric, whether commerce, whether industry, etc. All right. Now, that in itself actually created a proliferation or a fragmentation. And then, of course, because of successive government policy on a poverty alleviation, we adopted what we call the microfinancing and the savings and loans policies from elsewhere, in order that we could actually let for the financial sector be inclusive. Because in the past, you couldn't have a tomato seller go to, let's say, Barclays Bank for a loan. I mean, that was too heavy for them. The setup alone was too, what you call, adversarial, and it was too put off. But when the microfinances and savings and loan came, the character of these people could attract, people at the base of the pyramid. And so we realized that there were fragmentation in the access to finance. So unlike those days where you have a very pure commercial, banking activity, and then of course agri, and then of course industry. Now you're having micro, small scale access as well. All right, and that actually made the market, base very fragmented. All right, even including micro insurance. All right, so when you look at the insurance sector, you don't have only the traditional insurance, but you have a micro insurance. Then, of course, another line of fragmentation is what you have, the mobile money. All right, coming into the scene. So if you look at the consumer base, you realize that we're having a fragmentation of consumer needs as opposed to the traditional needs that we used to have. Now you couldn't actually say that there's only a commercial bank or investment bank or a great bank. Now you have all kinds of, banks, even including the Islamic banking, all right, which, there were other players involved in that. So there's a fragmentation of the consumer base, as opposed to, those days. Then there is also what we call the consumer trust, as another challenge, or the changing marketplace. Now, the trust in institutions generally are waning. All right, there's a decline in consumer trust. I don't think that any company could stand and claim that they have an amazing customer base that are so committed to them. In fact, consumers are shopping around almost every day. And the reason why consumers are shopping around almost every day could be attributed to so many other things, all right, including the obscene amount of money CEOs get to be paid, all right? That in itself is an issue that most markets are actually dealing with, especially when it comes to the financial services. The CEO bonuses and the CEO pay had been controversial. We have seen them in the US, in the UKs, in Europe, and then of course in Africa. Bank managers' pays in terms of salaries and bonuses are obscene. And because of that, consumers are cutting back their trust in businesses, thinking, oh, so I give you all these monies to keep for me. You give me a peanut as interest, but then you pay yourself awesomely huge bonuses. We've seen elsewhere where CEOs actually engineer take up. They engineer mergers and acquisitions just because they can have what we call the parachute. All right, the golden parachute, where they get paid huge sums of money to quit the business. And we've seen a lot of examples globally, all right? People set up their business just to fail in order that they could be absorbed. And when they get absorbed, the CEO get to pay handsomely well. They go and buy yachts, in all these Alicante or all these paradise in order to chill out, yeah? And consumers suffer. We've seen, evidences where consumers have lost out their money because of reckless, investment portfolios that these companies actually engaged in. And it has happened in our own soil just recently, just about 2017, 2018. We heard some awful stories about some deals that some companies actually, did. I mean, I was involved in one firm, savings and loans. Was it savings and loans? Yeah. They were doing a housing scheme. And naive as I was, one of my students was working with them and came to me and said, Doc, we're selling some houses at some place. And I was genuinely looking for a house to buy. And I hadn't been in the country for long at the time. He took me to the place, fantastic, a lot of homes, like they built, construction, massive houses there. And he said, oh, if you put down, 30,000, you can get yourself, I was supposed to pay up to some amount of money, get yourself some 2-bed and etc. And then you continue to make payment. Naively, initially I gave 15,000. I said, okay, I'm going to the UK. When I come back, I came back, I gave another money. And it didn't take long before I realized they said the guy is struggling, the company is struggling. Now my money was gone. But I could live with that amount of money because obviously, given your status, then there's an amount of money that you could live without or something like that. So I thought it was okay. All right. I didn't bother. Then the stories kept unfolding. Other people, and that's what we heard on TV, on radio, that companies were engaged in reckless investment, locked out investment, so many other things. And so the cleanup came. That actually leads to consumer trust, all right? People do not trust businesses any longer as safe havens, for their capital or for their assets, and many other things. Who want to add to consumer trust issues? Yeah? Questions or contribution, consumer trust. So we're looking at the changing marketplace in financial sector, and we're looking at some of these key variables that is actually driving the change. And as a result, you guys must be aware of in order that you could take the right decisions to deal with them. So who wants to add up to the consumer trust in terms of the changing marketplace? Who wants to add up? Priscilla, you want to say something?
Yeah, I want to say that based on experience of others, we have negative word of mouth going about. So because of that, it deters most people from also trying to engage in any kind of business with these institutions. So the experiences of others deters others from also trying to make that decision.
Fantastic. I mean, an example is what I'm just talking about, isn't it? My own experiences. And if say that these companies were still in existence, and I'm talking about that, certainly it affects your, your perception and the way you want to deal with financial institutions. Yeah, Prince. Yeah, Prince.
Yeah, Doc.
Yeah.
Yeah, I want to find out whether does this come under consumers trust, whereby the banks, takes the deposit money and invests into housing, and then takes it and invests into a foreign account to yield a resource for the company. Do we consider that one as a consumer trust?
Yeah, certainly, because then the money gets locked up, isn't it? Then when the consumer wants to demand, because the turnaround is so short, yeah, and then the investment turnaround is so long. Now there is a mismatch, and so when you're not able to pay back, the consumer's demands, then of course becomes a trust issue. It's as if you've been given money by your friend to say, oh, keep this for me. And then you are expecting your salary in 15 days time. You say, okay, let me turn this money around. I'll get my salary and pay. And then here you are tomorrow. Oh yeah, sorry, can you give me the money that I gave you? And then it becomes a problem, isn't it? So that wanes the trust. So definitely it's an example. Janet, you want to say something?
I wanted to say that, is there policies or strong regulations that the government can put in place? Like with your scenario where you wanted to buy a house and they took your money and you never got the house. So are so many other investment schemes that people have been convinced to put their monies in. And at the end of the day, it feels like all the responsibility was supposed to be on them, the one who has the money, to be careful where they put their money. But is that how it is in America? Is that how it is in UK or any other economy? So that the one who has the money is left to risk their money all by themselves. Is this something that can be done? I'm asking,
good question.
To protect the one who has the money.
Exactly. To protect the depositor. I'll answer that. Good question. Thank you. Gifty.
I want to know if this men's gold issue can be termed as a consumer trust.
Fantastic. It's one typical example of it. All right. So I will elaborate on that as well. Let me come to Janet's question. You see, elsewhere in the financial sector, and even I'm sure here, though I haven't checked, the financial product are actually protected by insurance. All right. So in UK, for example, there used to be what we call the PPP. All right. It was an insurance policy that every financial conduct or financial transaction that you take is actually protected by a certain insurance policy. But the financial firms were actually selling PPP as an additional insurance, all right? Which eventually the ombudsman investigated and they realized that it was a mis-selling. So there was a huge scandal about PPP that, in fact, the government asked every customer to check whether their financial product had a PPP on it and demand the money paid back to them, because it was like a multiple selling of insurance. All right. So the arrangement of financial products is that whatever financial product you engage in, especially when it comes to deposit, what do you call investment, etc., it already has an insurance, against it, that just in case, of any loss, all right, you're supposed to be, what do you call it, settled in a manner that would compensated in a manner that would actually affect you negatively. And so you expect that it is there. And I think that it's one of the considerations that the government decided to do this cleanup, so that perhaps they can actually reestablish consumer trust, and then perhaps, be able to put some of these measures right. I have to actually check what the BOG's policies were, but I suspect that was one of the reasons why they engaged in, these cleanups. Now, with Gifty's question about, men's gold, and it's a fundamental case. It's one of the star cases of consumer trust, how consumer trust is waning. I mean, listen to the if you look at the entire setup of men's gold, all right, and I was actually doing analysis with regards to the branding itself. Okay, look at the policy. The outfit is called Men's Gold, right? So the brand name itself evokes some kind of, image. All right, there's a gold in the name, there's a men's in the name, so it stands out. All right, and then of course the branding, the colors of the unit, if you go to their headquarters, is actually painted in gold, or you can call it gold color, that bling bling. Okay, and then if you look at the branding, I mean the advertisement of it, they use largely celebrities. Okay, largely celebrities. There were quite a lot of celebrity ads, like billboards that had known celebrity faces in there. Yeah, and then the PR was much more of, what we call people of certain elites, social elite. All right, so chiefs, ministers, and this kind of thing that the CEO was actually, kind of taking some kind of photo ops, pictures with, and things like that. Now, immediately it tells you something. There is an agenda, or there's an attempt, a deliberate attempt to position the brand within higher ups, that you would not even have a single mind that there's something fishy going out there. And that's not what I'm suggesting, because I don't know the detail, whether really it was a genuine business or there was something fishy. But the entire branding was almost to set the stage to say that there is no way this guy could be doing something fishy, because because of the factors involved in terms of establishing your perception about how genuine that business was. But then, of course, it turned out to be something different. All right. So if you have seen all these, you have seen celebrities advertising for this guy, you've seen public figures walking around with this guy, you've seen, images of gold and things with this business, and all of a sudden it crumbles. What happens to your faith? Or what happens to your trust? It means that you find it difficult to trust almost anything. Because look, the guy had been walking around with chiefs, with ministers, with celebrities, people that immediately establish trust. All right. They are almost like a de facto trust building characters. Yet it went bad. So you'll be like, hey, yo, I was even walking along with an angel. It didn't get me right. How much more the devil? You get it? So the trust level crushes like that, and it becomes very difficult for you to get it back. All right. So Gifty, does that answer the question for you? Okay. All right. So Eddie.
Yes.
Okay. Thank you, Eddie. Let's.
Okay. It's basically still about what you were saying about men's gold. I mean, what I don't understand is I think he's maybe, I don't know whether, I think the finance minister made a comment that all those who lost their investments did it at their own peril, and so they have to suffer whatever it is that is happening. Yeah, and I think the man is still, I think when you pass the East Legon office, he's still trying to set up, he tried to set up another kind of men's gold, but I think people were not patronizing, so the branding from there. But it looks like he's still trying to set up something. And there was another time we heard about him saying that people could buy houses. And is it that because the finance minister said it's like they've left it to everybody to suffer on their own, so they are not going to take
your internet is
Eddie, you on karaoke?
Retrieve the money or something like. I don't really understand what this whole thing.
Okay, Eddie, you on karaoke now?
Oh wow!
You've been on karaoke.
Hello?
For like 1 minute. Yeah.
Hello.
Yeah, we can hear you now.
Wow.
I think the latter part of it, we got a point that you made.
Is it?
Yeah. I'm sure we got the point that you made. Yeah, okay. Let
sure.
Catherine come in and then later on I'll address that. Catherine.
Okay, Doc. So what I want to add is that these days, Momo fraud is also contributing to consumer
yeah.
Yes, trust issues. And it appears, even though the telcos tell us they are doing something about it, they always tell us, I mean, you have to secure your PIN and all. I mean, the consumers don't feel the telcos are really on their side. Yes, most of them, you talk to most of them, they've been left on their own. Since it's your wallet and you have a PIN, the first responsibility lies on you to protect it. I mean, you're on your own. So I'd want you to maybe probably elaborate more how Momo fraud also, contributes to consumer.
Yeah, good observation. Thank you. Yeah, Bossman.
Yeah, Doc. So my question is basically with regards to changing of bank names. So, for instance, transition. So the way Barclays transitioned to Absa, can this be a perfect? Can we say that this can this be a perfect scenario where consumers lose trust? And aside that, is there a way that the new people can actually how do I call it? The new people can actually win like loyalty or something.
Yeah,
I don't know if you
well, yeah, I get the point you make it. So yeah, let me put out your question and address them before I come to the next person. So, for example, the point that Catherine made about Momo, so we're currently discussing the challenging or the changing marketplace of the financial services, and we're saying that one of the changes is the trust levels that consumers have is going all-time low. And as we said, you see, the financial sector is actually set on trust. I mean, can you imagine there's someone that you're going to give your money to. You don't even know the person. He sets up a box there and say, hey, I can take care of your money. Bring it to me. Tomorrow when you come, you will get it back. All right. That's one of the most riskiest thing you can ever do, just to give your money to a stranger and hoping that tomorrow when you wake up and you get there, you will get it back. So the financial sector thrives on trust. And the trust is actually embedded in quite a number of things. One, you're looking at the edifice, all right? You're looking at the structure and you think, I think these guys are genuine because the building looks great, all right? Colors look okay. When you go there, the facilities inside, everything else, the procedures that they mentioned. So the financial sector actually sits on these so-called features, all right, to establish the physical evidences, to establish trust, in you. And so when all these things are breaking down, then of course there's a challenge. And for example, the Momo when it came, people had issues with it, really, that you can send money through some wave or through some electronic means and you would receive it. People didn't even they couldn't barb the whole idea that I'll give you money. Somehow it turns into air or something and the other person receives it at the other side. It was so strange. But the good news is they managed to market it in a way that, I think the MTN does, Sikana Bao, that advert, all right? Then people started gaining confidence and eventually it became a norm. Now, the fraud aspect is now, kind of winning back or is waning the trust because now people can't really tell whether, just like banks, when your money get lost in the wallet, you'll be able to go to the operators and say, yo, my money just got lost. Can I get it back? And then you'll be paid. So the operators or the promoters of mobile money have to do a lot more to actually secure that consumer believability, all right, in the service in the first place, in order that they could actually even mean a lot more people, or they can get a lot more transactions going on. The good thing is it's still high. I mean, the Momo transactions is still high. But even then, if you look at it, it is not across board. It's only perhaps the MTN, doing quite a lot. Perhaps you would say that because of the first mover advantage. And you see, financial services such that, the inertial level is so high. Just like when people open a bank account, hardly do people close it because of the procedures involved in it, all right? Inertia is so high. So you probably could guarantee that for the next 5 years, Momo will be there. But should there be other compelling service that could actually assure and guarantees consumers higher levels of protection, I'm sure a lot of people will start exiting the Momo, all right? So yeah, it has a lot to do with trust issues, to sustain some of these, services as we're talking about. Janet, is your hand up?
Yes, it's up, Dr. Adam.
Okay.
With the men's gold issue,
yeah.
When it cropped up and people were in all manner of arguments, people were insisting that the government should pay these people who have committed their monies into this kind of investment up, so then they can deal with the perpetrators in a legal way. And I kept arguing that that is not done. Even in the US, there have been several Ponzi schemes, and people lost their money.
Yeah,
it's not done that government comes back to pay these monies.
Yeah.
The second question I also have is that, has it really affected the bottom line? I mean, the economy. Has it really affected the informal sector as it seemed like? Because a whole lot of people from different, sectors kind of put their money into this big pool. So has it really affected the economy somehow? Yeah. Right from the time it was discovered right till now? Because I could see some little mistrust. People don't want to move the money around. There's no circulation. Nobody wants to do anything anymore. People don't have money. And so we are all at one spot right now. So
yeah. Before I come to Douglas and Clement, let me respond to Janet's point. And I think Frank also put a point here that weak regulators such as NIC, BOG, SEC have actually contributed to the consumer trust issues, the lack of trust. It is true because they don't seem to be coordinating very well. You don't see the linkages, that NIC, BOG, and SEC are actually working together. What you hear is a fragmented kind of regulatory statement. Today somebody says this, today somebody says that. And so that coordination is not working well, and it's affecting trust. Now, Janet, the one point about the regimes is that, you see, in the US and the UK, they are very much welfare states. All right, if you lose money, and that's why last time I tweeted something that there's a correlation or there's a relationship between money and innovation. All right, if you have money, you can do risky things. Elon Musk, decides that he wants to build a spaceship, and he built it. Whether it works or not, he built it because he has money. All right. Now, in these countries, you can actually apply for bankruptcy, even when you have money. You can determine that the money that I have is just for my survival, but I don't have money for business. You're a business, all right? You can file for bankruptcy and still live good, all right? In this country, you cannot file for bankruptcy. Masa,
right.
And so we can't attempt risky things. Do you get it? And because of that, that's why sometimes there's an argument that government must take care of people who lose their livelihood as a result of money. Exactly. That's why the argument, because we do not have the safety net. In UK, I mean, a lot of people, in fact, if you give birth to like 8 kids, you are in business, you are rich. Because every month, the welfare money that you get, exactly, the government support that you get, it would be so much that you'll be okay without working. But in our environment, that's not the case. And that's why sometimes some of the social policy minded people would argue that it is government responsibility to actually pay back the losses that people as a result of lack of regulation, as Frank is actually talking about, because if the regulator is not doing their work well, and as a result, I lose my money. The argument is that I didn't know that that person is not genuine, because at the end of the day, you are supposed to do your work. That's why we are paying taxes by weeding out these unscrupulous people. So you cannot argue that, man, small self for Sikakoto. You cannot argue that because I am also paying you as a taxpayer to clean up the system, to make sure that the bad guys are actually taken out. Do you get it? And that's the argument. Of course, the other aspect of it is about whether people were really told, as the SEC were saying that they have put out several announcements that people should not deal with these people. I mean, the point is that there are some people who are not actually on the radio or they don't know what's going on in the country. They don't know what's going on in the country. So it is your duty to weed them out. So these are some of the debates, surrounding some of these, questions. But anyway, Clement and then Douglas. Clement, you're on mute. Yeah.
All right, Doc. I think you've already buttressed my point. I was going to add a bit that usually the first loss in consumers is basically because the systems are not working. And I think you did touch on that a lot. So, anyone at all can get up and then brand anything at all, because the intangible nature of financial services is such that it's hugely dependent on branding. So, just like you mentioned earlier, the men's good guy, in fact, sometime back, I really wanted to book an appointment with him, meet him. Just for him to walk me through how he was able to execute that plan. Now, I think he executed so well that at the end of the day, he won the trust of consumers. And just like you finally said, it's up to the regulator to be able to crack down on some of these things. You don't just go like, okay, this guy is doing something bad, so don't go to him. But what's your job? Your job is to crack down on them, take them off the system. Yeah. So I think just like this popular Facebook guy has been saying, the system is not working, and I think that's really the big deal when it comes to consumer trust. So I think you touched on it, and
excellent.
Thanks a lot. Yeah.
Great, thank you. Yeah, Gifty, is your hand up or is the old one? Gifty, your hand is up. Is it the old one or is the new hand up?
It's the old one. Sorry.
Okay, that's all right. Douglas, let's hear you.
Okay, Doc.
Yes, sir.
I'm looking at the insurance sector.
Yeah.
Most of the time, they come to you to sell it in a very convincing manner. For example, they ask you to buy, say, educational policy for yourself.
Yeah.
And then by the time you need them to, as it were, reimburse you with your investment, they tend to either demand documents that initially were not even told of, especially people who do car insurance and all those kind of insurances.
Yeah.
If you want to reclaim it or claim it, then they ask you, could you bring this document? Could you bring that document? Could you bring that document? At the end of the day, the person will get frustrated and then change the frustration out to people closer to him or her.
Yeah.
And then at the end of the day, that's either misinformation or frustration will be disseminated to various consumers of the insurance policy. And at the end of the day, there will be no trust in the system. And at the end of they don't give it to you.
Yeah.
So I think that is one of the major causes of the reason why people are.
Yeah, you're absolutely right. I mean, let's look at the genesis of the insurance firm. I haven't brought it up. If you look at it, I mean, for those of you, I'm sure a lot of you are millennials. But for those of us,
buying of insurance is when you
for those of us who actually were of age when the insurance industry really started, showing its head and I'm talking about when it was only SIC, and then later on we had that insurance firm. What's the name? The first private insurance was called, is it Millie? No, what's the name of that first private insurance firm? Who can remember? I think
Providence.
Old Mutual.
Not Old Mutual.
Providence Insurance.
There was this insurance firm that really had a lot of people in the street. No, it was initially it was a taxi, but then
Glyco.
No, before Glyco. Okay, I'll get it and tell you.
Providence Insurance.
No, I'll get it and tell you.
Vanguard.
Vanguard? Nah. There were these guys who started using sales, really sales.
Enterprise line.
No, I'll get it.
No.
I'll get it and tell you. So the point is I'm making is that earlier on, insurance had a lot of doubt. In fact, it's one of the most hated financial product in the market at the time. Why? Because of the point that Douglas made. The idea that they were not paying. In fact, people thought that insurance was a scam because they didn't understand why you should pay money. And then when it comes to claims, they will do Cobra, go and come. Like almost a year, just common claims they haven't paid. All right. Now, this is what the insurance firms started doing. They started advertising payout or advertising claims. You remember they used to hold some big check, all right, and they would take a photo, all right, and they would put it in the dailies that, oh, someone has just been paid his claim over this period. I mean, if someone's got claims paid, why must you advertise it? It was being advertised because at the time, people had a lot of doubt about insurance that they don't pay, that no matter what, your claim will be genuine, they will frustrate you, they will bring court cases, and they will not end up paying. So when they started doing those claim advertisement, showing that, yeah, there's a news item and they say, oh, Sumesi's insurance had been paid, they will show it in the dailies, etc. It started changing behavior. Of course, a huge amount of it was also policy, because then government policy was that some insurance were compulsory, especially auto insurance, for example. All right. So gradually, it got changed. That tells you that even when it comes to the financial services, delivery is a major part of changing consumer, attitudes, especially towards engendering trust. So we're talking about the challenges that we have in the financial sector and how can we actually, or what do we understand by them and how can we actually use them to work? It means that if you're in the sector, one of the key things that could really up the trust levels of your customers is about delivery. It's about being prompt in what you say you would do. So if you're if you're a financial sector player and a consumer calls you and your phone has to ring 100 times before you pick up, suddenly the trust level is going to wane down. It's going to wane because you are not being, truthful. You're not being prompt to the needs of the customer or the consumer. So there are quite a number of things that we must ensure in order that could actually up the trust levels, because already the sector is suffering a lot on trust issues. Jessica, Kekeli.
So I would attribute what I'm about to say to customer trust. But then the reason why right now the customers are also having trust issues with financial institutions is that I feel some institutions are not being honest. They are not being honest in their dealings. They're not being open with their dealings. They only tell customers the juicy part and what they get to enjoy when probably they deal with them. But they do not come clean with the clear procedure as to if you want to take your funds back. And at the end of the day, that is where bad mouthing also takes place. Because if customer A was able to bought into the financial instrument they were offering, and he recommended it to customer B. But customer B is probably not Ghanaians. We are like, oh, Cobra na Cobra construction nabra beka. So if customer A goes and buys into it, and it's time for him or her to retrieve whatever he or she is expected or expected from the bank, and they probably frustrate the customer.
Yeah,
it ends up leaving the customer embittered. You know, and there's no good word of mouth. And right now, there's a lot of the social media is doing more harm also than good. So immediately he goes on Facebook, he goes on Twitter, he goes on Instagram, and then he's bad mouthing the institution.
Yeah.
So at the end of the day, I don't know him personally, but I plan to do something with the said institution. It demoralizes me, and I don't embark on what I plan to do. So majority of this is, should I say, dishonesty, the banking sector.
Yeah.
So
yeah, it's true.
I think that's my honest contribution.
Yeah, because I mean, certainly the sector is actually thriving or would thrive on examples, like real cases, real, people experiences. And I think that I was trying to talk about, is it Millennium Insurance? Is that something called Millennium Insurance, right? Is that an insurance firm called Millennium Insurance?
Yes, there is.
Yeah, they may not be the first insurance, but I think they were the ones who started having this sales kind of approach, like unleashing people to the street. I remember, growing up, you had a lot of them in T-shirt, and as Kikeli is saying, it's almost like a real people's, real-time experiences or real life experiences that could actually demonstrate delivery. All right, because apart from that, I mean, if you are trying to win back someone's trust, I don't think virtuality or a little bit of a distance is the issue. It's about feely, all right, people's experiences and how these experiences are being narrated in terms of word of mouth to people is what would actually, get their trust levels up or down, as a result. So, I mean, for us in the industry, then the question is, what are we doing? What are the extras are we doing to ensure that people would indeed be confident in our service, all right? And knowing that a little bit of disappointment or non-delivery would definitely, take them off, and then will sway their contribution or their monies to other places. As we speak, I remember when the cleanup started, I was interviewing some people about the effect of the banking cleanup, on the industry, and there was a lot of oscillation. Like people were moving their monies from banking to real estate to things that they can see, gani, yeah. So they would take their money, and either some people were actually plunging them under their pillows, as we used to know them. People were afraid to push their money into the sectors, and they were swinging the money up and down, different kind of sectors. And immediately the financial sector becomes weak in aggregating assets, then the economy is weak. Because if you look at most of the developed, worlds, banking or the financial sector is at the center of economic activities. And once your financial sector is not at the center of economic activity, then of course the economy becomes weak, because they're supposed to aggregate those assets and advance them for economic activities. And if people don't trust it again, and they will not take the monies to the banks or to the insurance firms, then how would they get the money to give or to advance to other people to use it for economic activities that will turn up to grow the economy? That's the problem. That's the challenge. All right, let's move on. So the other change is the new entrants. All right. So we've talked about industry consolidation as some of the changes that is happening within the marketplace of financial sector. And we've seen our own industry consolidation. Even that we didn't even finish about the industry consolidation. We're now seeing even bank assurance, so we're now seeing partnership between banking and insurance firms, for example, part of the consolidation. At some point in time, we will see, we have even started seeing them, the banking sector moving into mobile money, all right, which we've seen GCB, others moving into that. That's part of the consolidation. We've talked about the fragmentation of the consumer base, where the consumers are now demanding more than the traditional financial product. People are demanding, even as we speak, there are financial products for what do you call giving birth, isn't it? For I've seen one. Is it Access Bank? They have something called fertility something. Who knows about that? Fertility product or something, financial product about fertility. So we've seen quite a number of fragmentation in consumer, behavior in terms of consumption, and then we've talked about the waning trust, of the consumer in the sector. Now there is also new entrants, coming in with new technologies, etc., who can actually give us some ideas about that side of change in the industry, new entrants. Yeah, Jessica, your hand is still up. Kelly. Okay, is it Mabel, or how do I call it? Mabel?
Yes, Mabel.
Okay, Mabel. Yeah, go on.
So I think the new entrant, I would mention crypto.
Yeah, crypto, correct.
Yes.
Yeah. So again, we see crypto, we see what we call fintechs, coming in. What other ones are we seeing? New entrants. Maybe would you want to expand crypto a little bit so that others can follow you?
No, that's like trading, trading online using
digital money.
Digital money, exactly. Like what's it called? Ethereum, Binance, Bitcoin.
Yeah.
So yes, doing
so
transactions using digital.
going in there. Yeah. Great. And these things are disrupting the sector, isn't it? Because in the past, if somebody had, let's say, 1 million and would want to use it in the traditional settings, now this person is converting that into crypto. All right.
Right.
And that means that we are going to be fleeced. I mean, the traditional sector is going to be fleeced with money because people are now shifting towards digital, money. And obviously we're not using crypto. So if we're not using crypto and some sectors or some economic regimes are using crypto, it means money getting out of our sector, isn't it? Getting out of our economy. And these days you find young people, and I have some friends who are actually trading in crypto. Right. And that means that the country is not going to benefit because the country is not engaged in crypto. In fact, I think the last time I saw the central bank's policy on crypto, it was about they trying to understand it, and I hear there was a team being set up to actually look into crypto, for example. And until the country decides that they will adopt or they're going to actually look into a certain percentage of crypto, then of course quite a number of money had actually been moved out of the economy. And then of course, Catherine is talking about forex, right? Forex trading, yes, that's another non-traditional kind of financial services area that's going on currently. What else? New entrants and how that impacts on us. Yeah, new entrants. Yeah, we now have quite a number of fintechs, isn't it? I particularly like these guys. I don't know, Express Pay. I sometimes I get angry with them, but I use them quite a lot. Who has Express Pay? What do you call app on their phone? Have you heard about Express Pay? Bitsica. Oh, really? Is the best. Okay, Clement says Bitsica is the best. All right, I haven't heard that, Bitsica. Yeah. Clement. Are you there, Clement?
Yes,
yeah, what do they do? Bitsica, what do they do?
Okay, so Bitsica is just like Express, sorry, but they run across some 3 African countries, and the way they do it, you actually even have an option to even have a digital sort of card where if you don't want your merchants to know who is making the payment or whatever you are buying or where you are from, you can do so. And they have quite they even have let's say you want to buy something, but you want to split the bill with someone, you can equally do that. Yeah. So the
Okay.
features on bit stickers compared to Express, I think is best. And you can also make payments to, I think, about 3 African countries. They are gradually expanding to more countries. And the co-founder is a Ghanaian, so I'm also just trying to.
Yeah, Express Pay too is some Ghana boys. But I'm actually currently looking for one that can allow me to transfer to UK. If they can do that, definitely I will switch to them.
Okay, I think the one that you can try should be Flutterwave, but I don't know.
Yeah,
Flutterwave is another.
Yeah, because most of them they allow in, but you can't go out. Just like even Western Union, you can't transfer from Ghana to England, but you can actually do the other way.
Yes. So for Flutterwave, what I usually do is if I want to make payments,
Sorry, go on.
Yeah, so the person would have to the person must have a Flutterwave account. So I transfer from Ghana and then
okay, that's good. Then I'll look into that one. And these ones, if you look at the industry, I remember a check fast space. Okay, I'll look at that. Now I remember very well, somewhere early days, somewhere in 2003, 2004, there was this money transfer company in England, I mean in UK. It was a Ghanaian money transfer company, forgotten their name. We used to transfer money, all right, from them. You have to call them, you pay the money into the account, all right, then you call them, and when you call them, they will do the transaction over the 2 days, it gets to Accra. Now it's no longer, that service is no longer used because technology had moved on, all right? The fintechs have made it possible, like the Flutterwave that you're talking about, for people to send money via their computers without using, I've forgotten the guy's name, the company's name. They really made a lot of money. Over time, they're no longer useful, all right? Which means that every day the industry is changing in terms of new entrants coming into the market. You want to be aware of technological advances that is actually making certain services redundant and making sure that you probably can adjust yourself to suit modern technologies and to suit the increasingly consumer, the change in consumer behavior and in consumer taste, for example. All right. So as industry players, we have to be mindful. For me, the other time I was talking about the 5 forces, the Porter's 5 forces. And I'm thinking that perhaps even the consumer need is not even the most fearful force now, other than technology. I think that technology is the most feared now. I don't know, you guys, being industry players, whether you agree with me, because you don't know which technology is coming to disrupt the market tomorrow. If you look at, let's take, for example, those manufacturers of cameras, all right, Kodak, Canon, and all those. All of a sudden, iPhones and co come into the market, and the entire business model is up in the air. All right. In the past, we used to have what we call space to space or whatever because the telephonic system was not working properly. Today, they're almost like when you go to a school and you see the Ghana Telecom phone box somewhere, and then you ask yourself, hey, so the world can change like this? Because those days we used to queue, at the phone box, people wanted to make a call, So for me, I think one of the most fearful trends in business now is what technology is going to disrupt our market the following day. New entrant, Not long ago, we saw Clubhouse, all right? Clubhouse come in. How many of you have seen Clubhouse? Or how many of you are?
I saw.
Yeah, okay. So we saw Clubhouse come in, and then we said, wow, voice is easy. It's a lot more easier for people to talk than to type, all right? So we thought that, well, Clubhouse is going to have a very tough competition for the text-based apps like Facebook, like Twitter, etc. All right. Then in just about few weeks, we saw Twitter come up with Space, all right, by itself, like similar to Clubhouse. And then we saw what do you call Facebook introduce its own talk feature. Do you get it? So then you ask yourself, okay, so what's going to happen to Clubhouse? Just a service that has just been launched. They haven't even opened up to Android. They're on beta system. I mean, beta stage. I think they've gone past beta stage, but they're on iOS. And immediately, all these other ones opened similar features on their network. And so it is very, very fluid in terms of the new entrant. Who is going to hit your market the next day has to be your concern. Gifty, you want to say something? Gifty, your hand was up.
No, sir. It's a mistake.
Okay. Mabel, is your hand up or is the old one?
Oh, no. Let me lower it, please.
Okay.
Sorry.
All right. So again, we have to be mindful of who is going to be the new entrant or what technology is going to disrupt the market the following day. And you have to be very, very mindful of following some of these trends, because if you're not careful, you'll be overtaken by events, because day in and day out, things are changing. Consumer behavior is changing. Consumer taste is changing. People are asking for new things. People's needs are changing. Currently, as we speak, there are so many other things that we used to do. We don't do them anymore. The Bible, for example, is suffering, isn't it? The Bible is suffering because those days we used to have them under our pillowcases. Now phones have replaced them. How many of you still have your Bible under your pillowcases? Under your pillow? Janet, do you still have your Bible under your pillow?
No.
But
even at church, I'm a Catholic. Even at church, I don't hold my hymn no longer. I have a Catholic hymn on my phone.
Can you imagine that? So even the Bible, Almighty Bible, is suffering. Now, Mercy, are you sure you have your Bible under your pillow?
Yeah, a very big one.
The Bible is suffering now because we have replaced them with phones. In fact, we used to have a ritual that you get up in the morning, the first thing you do is you read the Bible before you go and brush, right? Or you brush, they come and read the Bible. Now we have changed the ritual. What is the ritual now? What is the ritual?
You unlock your phone and check your WhatsApp messages.
In fact, people wake up 2 a.m. to check their messages.
Yes.
2 a.m. Sometimes if you don't sleep early and then you are just there, 2 a.m. you see somebody's online, say, hey, I know I hear they're online 2 a.m. There are a lot of things that we've changed. Our behaviors have changed quite a lot. Some of them we don't even recognize them. We don't even pay attention that we've changed. There are a lot of few behaviors that we've changed, and these are some of the changes that actually impact on our our industry. So we have to be mindful of these technological changes, etc. All right, good. Okay, so the changing financial services, banks selling and underwriting new products, as we're saying. Now banks, for example, are underwriting insurance, investment, transaction processing, etc. All these have seen some changes. Offshore outsourcing, has actually occurred. I was even surprised that even Ghanaian banks had, their call centers abroad. I couldn't believe it. Apparently, Stanchart, for example, had their call centers abroad, and I was like, really? I thought it was only foreign, regimes that had, call centers, other, outsourcing places abroad. But apparently, even in Ghana, some firms have their, outsourcing. Okay. And then, of course, we have industry concentration, as we have talked about. We've talked about, a small number of banks, controlling, the credit space. Of course, we would say that if you go to the developed, economies, that's what happens. But even in here, we've started seeing concentration, as we just talked about. And then we've seen mergers, and acquisitions ongoing with typical of ABSA. Yeah, I think Douglas asked a question about ABSA, the Barclays ABSA, and whether it affects consumer trust, wasn't it?
Yeah, Provo was me, Bossman.
Yeah, Bossman, yeah. I think there was a study that we were doing, myself and Gilbert, and we found out that people actually got annoyed because of that change. The reason being that the brand is a reflection of consumers' image, isn't it? So you choose what you eat because you want to look like what you eat, or you want to look like that. You choose your banking, firm, or you choose your bank because it's a reflection of you, right? And your personality, a reflection of your personality. And so people who bank with Barclays want to feel some level of internationalization, all right? That they belong to a global player, that a majority of them are global players, actually. They are global trotters. They want to feel that they belong to a global brand, which is Barclays. So they feel some level of, higher class, with the name Barclays. All right. So the top tier consumer want to feel internationalized or globalized. So the idea that a global brand like Barclays is being absorbed by an African brand, of which we understand ABSA is, I think it was a slight to some customers, and they felt a little bit peeved, and it was actually, I think the bank itself realized that, because I had a conversation, and some people were saying, yeah, there were a lot of complaints from some customers. So yeah, it affects, trust in that sense. Who works with ABSA? Who works with ABSA? One thing that we should know, in-class discussions are in-class discussions. That's why we say academic freedom. So when you're citing examples, don't be afraid to share, because it's not supposed to go out. It's for examples in class. And don't be, apologetic of comments that you make, unless of course they are disrespectful. But of course, I don't think we would actually, do that here. So feel free to discuss and then share your ideas. All right. Okay. So Bossman, so that's the thing. There's a evidence that yes, people felt slighted. People felt that they were betrayed in terms of being passed on from a global brand to a supposed African brand. And sometimes that's a irony of consumer behavior. You would think that, oh, wow, if you're an African and it's being acquired by an African brand, you must be happy, isn't it? But it was a different case altogether. Yeah. I'm not sure how widespread it was, but from people that we spoke to and things, I think it didn't go down well with them. Is that clear?
Yes, sir, that's clear.
Thank you. All right. Yeah, so changing consumer, yeah, elsewhere in the West, they are becoming more into debt. Consumers are more in debt than ever before. Is that the case in Ghana? Are people more into debt than ever before? The credit card kind of craze, but I don't think in Ghana we are, because we actually spend what we have, isn't it? Our economy is not more of a credit support, unless of course there's other, demands that people are. But I don't think we are very much credit-based economy than, having our own money and spending our own money. Or things are changing. Okay. Then population is getting older. Obviously, we are much more younger populations. Increasing variance in wealth distribution, approximately 70% of Ghanaian adults without bank account. But this particular point is being, contested by the claims of the vice president. Is that a case? Who can actually expand on that one? People like borrowing. All right. Messi says people like borrowing. Are people borrowing in Ghana? I thought in Ghana, most people spend what they have. Anyway.
Yes, please. They like borrowing.
Wow.
Yes. When you look at the those in the educational sector, like the teachers, they are more into loans than investing.
Wow.
Hey. Yes, and people also take loans from this mobile money and all that. Yes.
Yeah. So we are gradually creeping into debt, right? Bossman, you wanted to say something?
So, Doug, I wanted to talk about the quick loan that everybody was
Yeah.
When you go on social media, you realize that a lot of people are making fun of it. I mean, they keep on saying, "Oh, it's just 50 cedis, it's just 100 cedis." But you'll be amazed. I don't work at MTN, but I'm 100% sure that let's see, 30% of people in the university have had some sort of quick loan there. So you can clearly see, and if it starts, everything that starts small actually has a potential to grow. So
sure.
Yes, we are getting there gradually.
Yeah, sure, I agree with you. Now, on the point of approximately 70% of Ghanaian adults without bank account, we saw some initiatives taken by the obviously the country in respect of what do you call a bank account, generating mobile money, and then the spread of mobile money now becoming an alternative to bank account, which the country had gone on to acknowledge or to recognize, mobile wallet as a sort of a bank account. Can we actually push that argument, or you think we're still very much traditional bank account, oriented? Yeah. Any ideas? Are we still traditional bank account oriented? Are people filling forms? Are we asked to give a bank account, and then if you put their mobile money or mobile wallet there, they would say, no, we don't mean this, but we mean Messi?
Okay, so I actually work with Data Bank, and for the investment banks, we don't pay out money, like we do it through banks. And on the withdrawal form, we have options for token, bank transfer, and mobile money. And you realize there are a lot of people going for mobile money.
Wow.
And with the mobile money, the limit we do is 2,500.
Okay.
So someone can come and want to withdraw like 10,000, and we prefer that we divide the money into 4. So the person will actually fill 4 forms that we process all 4 like on different days. Whilst we could have done that through a bank, and the person would have gotten it in like the next day or something. Yeah. And most people don't have bank accounts. They mostly deal with the rural banks, which we don't do transfer to. Yeah.
But you would have thought that data bank type of customers would have bank accounts, isn't it? Because by looking at data bank, I mean, the brand image that comes to mind is about customers of a certain level. So that's entirely not the reflection, isn't it?
It's a mixture. Like, we have people who have bank accounts and all that, and there are some who don't have bank accounts at all. Oh, wow. Yes, there are some who don't have bank accounts at all. So,
and just to ask Messi, even for those who have bank account, at the mobile money their first preference?
Yes, they prefer mobile money.
Why do you think it's
okay, I also think that with some of the banks, it takes maximum 3 working days for the money to reflect. But with mobile money, they get it the next day. And for some of the banks too, they can get it the next day, but people wouldn't like to go to the banks just to withdraw. Yeah.
Okay, so the issue of
access to their money.
Okay, so the issue of accessibility is key. The idea that mobile money is timely and it's not far away because it's just a corner, around the house corner, they can actually get access to it. So
yes, please.
Place is actually playing a key role. All right, that's great. Edward.
Hi.
Edward, you're now on karaoke again.
My sound.
Yeah, Eddie, you're on karaoke again. Can you change your location?
Oh, my sound is not good.
Okay, we can hear you now. Okay, you've gone back.
Hi, Doc.
Yeah, we can hear you now. Go on.
Okay. So
Okay, Eddie, you are now on karaoke again. Can you type? Can you type in?
Because the bank usually waste a lot of time, and I mean, when I was going to pay for,
Okay, so we've got a few points in here. Kwame says on point of bank account, I think people are becoming a lot more enlightened. Literacy levels are going up, and a lot more people are opening bank accounts. Momo, however, is growing at a faster pace. In Tiamo, Douglas says queues alone in banks bore people. Do we still have queues in banks? And David says, from my little experience, most employers prefer paying staff through bank accounts than on Momo. This has led to even staff earning about 150 Ghana cedis a month, opening bank account and bearing the brunt of all the bank charges. That's really unfair. Example, University of Ghana. Hey, really? Oh, that's unfair. All right, Priscilla, let's hear you.
Okay, so I wanted to add to what Messi said.
Yeah.
So with Momo, there is the issue of convenience, and then also it's accessible. You can withdraw at any time, unlike with the option that her customers have of going to the bank and all that. Now, from Data Bank, the next corner you find a merchant. You go there, you withdraw your cash, you are gone. So the convenience, and you are also able to easily monitor transactions on your phone, and your phone is always with you. So that level of convenience and peace of mind, knowing that the funds are safe with you wherever you go, that is what most people dwell on in order to use Momo instead of they trying to go traditional, using the traditional banks.
Yeah, excellent. Great point. So how are these traditional financial institutions battling this? How are these going around it? How are they going around it? Or they are stuck? Bossman.
Yes, so Doc, I'm sure they are battling this by trying to provide convenience to their customers. For instance, trying to make their customers feel safe, not necessarily without having an ATM. Because let's just say I have a friend that banks with GT Bank, and his app can do everything. So I think one key thing that I've picked up from consumers is that they want to have some sense of assurance that they don't want to feel like, okay, even if I lose my ATM card, I don't have access to my money. They want to just see their money physically with them, and they want to be able to quickly know that I can easily get my money.
Yeah.
With the bank, that is something that a lot of them don't naturally have, and they're now trying to get close that gap by now entering into the digital space, coming up with their apps and stuff.
Yeah, great. Yeah, so Dow says that enhancing digital banking experience for customers is the key. Good. All right, Clement, if you can please.
Yes. So what I just wanted to add is that, the banks don't want to be left out in this drastic change. So what most of them are doing is that they are integrating their systems with the mobile money payment platform, where you're able to transfer money from your bank account to your wallet and vice versa. So I think they are trying to catch up, because at the end of the day, definitely convenience is something that almost everyone would buy into. So I think by the personal bank will never be left out, but for the digital space, I think that's going to be the new future.
Yeah, great. Thank you. Yeah, Priscilla.
Okay, so I just wanted to add on saying that yes, so apart from the apps that they have introduced, most of them have also gone into the use of USSDs or short codes. So you just dial the USSD, you have access to your accounts. With GT, you can open an account just dialing their short code and all that. So bringing the banks closer to the customer instead of the customer having to find his or her way back to the bank.
Yeah, great. Now,
and then I have a question. if it's okay to ask. So what about those banks that are not trying to also go digital? Example, we have rural banks, some of these savings and loans and stuff. They don't have the muscles that these typical traditional banks have. So do we foresee them collapsing, or there is something that they can do in order to take advantage and then also play along?
That's a good question. Who want to attend before I come in? Do we foresee the rural banks or the community, so-called community banks, collapsing as a result of not being a big player in the digital space? Or what do we foresee? What do we think is the way forward? Okay, Catherine, you want to come in?
Yes, okay. I'm just thinking, I don't foresee them collapsing anytime soon, because when you take into consideration their target markets, these are people who are not really tech savvy. You know, some people don't still, they don't want to do anything technologically based. Yeah. So I don't think they will be collapsing anytime soon, because they still have their market, and it will take a longer period for these people to want to explore, this new area.
Okay, thank you. Douglas, your hand was up.
Yeah.
So
with regards to the rural banks, you see, most of the rural banks even bear, and you know that some people usually feel that once the thing bears might give them some level of, that they have some form of base with regards to customers. And then when you look at the rural banks, mostly they deal with farmers. They deal with farmers. And then it is very difficult for these farmers to get loans or access to credit facilities at big banks such as data banks, the NIBs, and the rest. So that more of an informal sector are mostly linked with the rural banks. So therefore, them declining from the industry would be, even though with regards to technological advancement, they are lagging behind. I don't think they are going to phase out anytime.
Yeah, because of the niche area. Okay.
Yes.
All right, thank you. Kelly.
Okay, with regards to the rural area banking, I don't think they are going to collapse, but I rather think that it's going to come, the niche is going to be like a smaller version of a niche. When I say that, I mean, now things are changing. Most of these farmers have smartphones. Most of these rural area folks are now beginning to become very curious, to know what is going on around. So instead of collapsing, they are rather going to really, really be, it's going to be minimal. But as one of my colleagues said, some of these rural area folks do not like change. They find it so difficult to adapt to change. But the percentage that love change or that are slow to change will gradually catch up, reducing that niche when it comes to the rural banking. Thank you.
Okay, great point. Clement.
Yeah, sorry, sir. I'm just doing it.
Okay. Bossman.
Yeah, so I don't foresee them collapsing, but what I foresee them doing is establishing a hybrid platform. So as Kelly was saying, so basically they are going to establish this platform so that they don't lose their original target audience, and also create a certain platform where they can actually get to still, let's say, they can still hook, in quotes, their customers that are evolving, so that it looks like they are growing with their customers. So in their customers' face, the bank is growing with them. So we are going digital. So just to play in that kind of mindset, to that's how I foresee it.
Okay. A great point. That's the fusion of the two, the traditional and then the new, the emerging technology. That's a good point. Mercy, is your hand up?
Yes, please.
Yeah.
I think I've listened to most of us here, and it's like the conception is that rural banks are for people in the rural areas and all that. It depends on where you are. If you are in Accra, you wouldn't see a lot of these rural banks. But then I'm currently in Kumasi, and we have a lot of them here.
Mm-hmm.
We have a lot of them, and I think they are even like more than these commercial banks, if I'm not exaggerating. And you realize that their target market is not only farmers, but then you have people in the informal sector, a lot of them going to these banks. And I think they are even like reaching out to more people than even these commercial banks. I don't know, maybe it's because Kumasi is a business town and all that. Yeah.
So
and
would you say that they probably are even reaching people in the formal sector, but at the lower tier in terms of wages?
Exactly. I even have clients who are teachers, some are even lecturers, and they'll tell you my salary passes through a rural bank. And I'm so surprised. I'm like, hey, how?
Yeah.
Yes.
Okay.
And I don't see them collapsing anytime soon.
Yeah.
Yeah, I don't see them collapsing anytime
But
soon.
in terms of I think the question that you asked is crucial in terms of their orientation. All right. Do you think the management of the rural banks and the community bank are oriented towards technology that at some point they would want to start engineering their customers towards digital? Because I suspect that in terms of cost control, you probably will be cost efficient with digital than with the traditional way of doing things. And if the pressures are coming from their boards, their shareholders, etc., in terms of cost management, you rather want to see them move into digital. Is there something that orientation-wise, the management of rural banks are very steep into traditional ways, or they're likely to change orientation?
Okay, for what I've seen right now, I think they are more into the traditional way, and some are adopting technological ways like how they even take their monies. So I know someone who is with this credit union, they go around, take deposits from their clients, and as soon as you make a deposit, you get an alert.
Wow. Okay.
Yes, which used not to be so. So, well, I think with the mobile service and all that, I don't know what they are up to currently.
Are they now using ATMs? Because we know they didn't used to have ATMs.
Yeah, some of them use ATMs.
Okay, so it means
some
that
of them
they are gradually introducing technology from the lower end of tech perspective.
Yeah,
and then perhaps it will be inching up little by little.
Yes.
Okay, great point. That's a good conversation. Thank you. Okay, so yeah, we're just about finishing. Okay, so if we look at sorry, yeah, in terms of sources of change, based on the changes that we just talked about, where are the changes coming from? And we can see that regulation is a big part of it. All right. Obviously, the regulation in terms of government policy, in terms of even the market characteristics, and the features that could actually protect the industry. I mean, recently we heard about the introduction of the ID cards for Momo. I think there was a huge concern about that. People were complaining about if we say that we are trying to encourage, financial inclusion. As a result, we brought Momo or mobile money, etc., as a way of building or bridging that, financial divide. Why then introduce ID cards? All right, for collecting, what do you call Momo? I think there was it last week? Was it last week or last 2 weeks? There was a huge story in the news. When I don't know whether MTN had actually been asking for ID card long ago, or they just introduced it.
They just introduced it about 2 weeks ago.
Yeah.
Thereabout, that you have to issue your ID card, and the ID card was specific, the voter's ID card.
Yeah. Yeah, and people were really complaining that if we are trying to encourage, financial inclusion, then asking for IDs is going to actually curtail that particular progress. But of course, there was the argument that because of fraud,
Yes.
we're going to introduce that. And so, sorts of changes that actually impact on the sector mostly comes from regulation perspective, and typical is what we're actually discussing now. Others actually come from economic forces. The economic forces, like we're just talking about, the what do you call, the community banks or the rural banks, and the likelihood of they changing. Would that be as a result of regulation? Maybe not, but as a result of economic forces. Because if we start having, as Messi was talking about, we start having rural banks having customers of formal nature, but at the lower tier of salary, certainly their expectations will be different from the typical rural bank customers, isn't it? So a rural bank is going to have two types of customers: those who are actually formalized but with a lower tier of money, and those who are not formalized but they are informal sector but they have a lot of money, right? These two customers could have a different kind of demand, on the business, and as a result could actually instigate some kind of reform, within that. Because if the guy who is actually with the formal sector, although has 150 Ghana, and puts the money and says, I just want to know if I can have a short code where I can send the money, I request to know my balance. But then the rural one, the typical rural one, doesn't even know what the short code is. Certainly the company or the bank, the community or the rural bank will be forced to do something, because a chunk of their customers are formalized sectors, but that their monies are not high. But then they want to use a certain technology to know what their balances are. So they will be forced to implement that. So sometimes the economic forces would actually cause the change, And then of course the declining consumer loyalty also, spell out changes, as we're discussing. The idea that consumers are not loyal any longer to businesses, all right? I mean, we shop around for everything, isn't it? We even shop around for church services. I mean, people have been going from one church to the other because they're not really, trusting the pastors that much. And then, of course, we're talking about technology. So these are some of the sources of change, that we're having. And so as players in the industry, we have to be mindful of these sources. What other sources can we think about apart from these ones we're talking about? Regulation, economic force, declining consumer loyalty, technology. Do we foresee any other source other than what we're talking about? Any other source? I think there is. Guys, think. Yeah, pump up. There is a recent occurrence that is actually telling you that there's other sources. There are other sources. Yeah, who can tell me? Prince.
Yeah, Doc.
Yeah.
So change of government.
Change of government. Yes, yeah. that would very much lie under regulation, because usually the regulation deals with policy, etc. So, yeah, global pandemic. Yeah, Kwame, you're right. COVID. So yeah, social changes. Yeah, health and social, change. Obviously, we're dealing with COVID, and quite a lot of consumer behavior has been altered, or business processes have been altered as a result of that. I mean, you could hardly think. It's Kofi asking. Yeah, you could hardly think that you would go to a bank and you have to wash your hands before you go there, isn't it? But unfortunately, we are doing that. Unfortunately, we're doing that now. So, yeah, social cultural changes or sociocultural, sources can actually impact on, can become a source of change. Are you with me? Yeah. Any other source that we can think of? Any other source? So yeah, when we are thinking about where the change will come from, let's be mindful of these areas, and then plan to globalization. Fantastic. Anyway, so economic forces, interest rates, stock market, unemployment rate, natural leading indicators. All these are sources that can actually impact on the market. And then regulations, we've talked about other regulations. Identity theft, one of the biggest issues in Europe and America. All right. Of course, it looks like our criminals are getting sophisticated, and so it's moving towards the direction too in our market. Identity theft is becoming big, and that's what is impacting on the mobile money, and that's why they're asking for IDs, because there's quite a lot of identity theft issues going on, impacting on these markets. Anyway, guys, I think we should close. Thank you. Any questions or contribution? Questions or contribution before we close? It's 8 o'clock. Oh, 10 to 8. Questions or contribution? Yeah, anyone? Okay, so did we grasp what we have just gone through? Yeah?
Yeah.
Can you guys hear me?
Yes, sir, we did.
Yeah.
Yes.
Okay, so as a recap, so we have actually looked at, two things. We looked at the environment, the financial services environment, the key players in them, etc., and what we mean by financial services and the way our sector is made up of, the big banks, universal, obviously insurance, microfinance, etc. And then we've looked at the challenges of financial services. And these are the prelude to the entire, subject. So if we have to understand the strategies, then we must understand what are the challenges in the field and what are the changes that's actually happening. And we have actually come to terms with all these. So next week or next session, I think we're looking at the consumer behavior, etc., that underpin the sector. All right. I have enjoyed the conversation. I think you guys have been very interactive. I love it. Please keep being interactive so that we can enjoy the class. Otherwise, the digital space is very difficult. It sounds very dry sometimes. But if we keep the interaction going, I think we would enjoy the class. All right. I'm grateful. Thank you. And know that Corona is still there. So be mindful, be careful.
Stay safe.
Don't expose yourself. Yeah. All right. Yeah. By the way, it's my birthday, so myself and my guys will go and sit somewhere and then sip some wine.
Oh, happy birthday!
Yeah, happy birthday.
Oh,
Happy
birthday.
birthday.
Thank you.
Happy
birthday.
Happy
Happy birthday to
birthday.
you.
Thank you.
Don't
Thanks, guys.
have ignored COVID to
Happy
come, but
birthday,
I
dear
did not come in
doctor.
it. I
I'm
appreciate
saying
it.
we would have ignored COVID to
Please,
come
can
around.
we have
Yeah,
a
you would have.
virtual
Yeah.
party?
Happy birthday.
Yeah, thank you. So hopefully
Can
we'll
we have a
plan.
virtual party?
Which party is that, Messi?
Virtual party.
Virtual party.
Virtual party. Yeah, Charlie. That should have been nice. To have a bouncing virtual cake, for example.
Yeah.
All right, guys. I appreciate it. Thank you so much. All right.
Thank you.
All right. Good.